Hello everyone and welcome to my morning report analysis videos on Thursday the 18th of April with me, Richard Perry, market analyst at Hantec Markets. There's been a deterioration in risk appetite today. This has come as the Eurozone flash PMIs have come out disappointingly. They've missed across the board and it seems as though the green shoots of recovery in the Eurozone are not really coming through. That the Euro is under pressure now, back 0.4% and certainly testing key near-term supports, and that is helping to pull this Eurozone data is helping to pull markets back in towards safe haven plays. You've seen the gold that has found a basis of support. You've seen the yen pulling higher, and also look at these bond yields sharply lower on treasury yields. But let me show you the reaction on the German yields, which have pulled much lower. They were back at 0.1% on the 10-year yesterday. That's back 6 basis points from that high now. So that has hit the euro this morning. Now, this move into safe havens has certainly, as I said, affected across forex markets and also equities as well. Move out of equities, as you've seen, a basis of profit taking that's come in the last 24 hours or so. The S&P 500 just dropping back into the close yesterday, and futures are lower again today. S&P 500 futures 2 to 0.3% lower. You've seen volatility, which is pulling a little bit higher. So this could be a point at which some profit taking takes hold in the run up to Easter. As several markets take a break for that Easter period. So that's basically where we're sitting today. Now these flash PMIs have been key, but also we're looking out for UK retail sales at 9:30, expected to be relatively improved at 0.4%. At 0.4%, that comes out in a little while, as you can see here. Although that would be 0.3% negative on the month. Then we're looking out for the US data. US across the board, we have US weekly jobless claims expected to tick higher from 196, which is a 49-year low, to 205. Also Philly Fed, a slight dip back on the Philly Fed, and also retail sales for the US expected to just move slightly higher by 0.7% on the month. So lots to think about that. And also the flash PMIs for the States as well, 52.8 on manufacturing services at 55.0. Now, my chart of the day is the Kiwi dollar. Now, what we have seen is the Kiwi dollar under pressure. We had inflation data which disappointed or came in weaker than expected yesterday, and that hit the Kiwi to the downside. And that move, given the fact that risk appetite has suffered again today, has meant that the Kiwi is now testing that 67 big figure level. That has been a bit of a pivot line in recent months, and a closing breach of 67 I think really does open the downside, possibly towards a test of that spike low from January at 65.90, but certainly reflects the deterioration in risk appetite for the Kiwi dollar. Now, the move back towards the mid to low 30s on the RSI would confirm that. MACD line is already bear kissing lower, stochastics tailing off. So this is looking like it's a downside break in the offing for the Kiwi. You can see that on the hourly chart, where more negative configuration on hourly RSI, rallies being sold into, and looks like it's a move that's going to be testing 67 figure throughout today, and a closing breach would be negative. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.